Welcome back, everyone. We're diving into some really fascinating market moves this week, especially how China's economic policies are making waves across different sectors. We're talking luxury brands, tech giants, even your favorite fast food chain might be feeling the impact. We'll be breaking down those connections using some really interesting insights from a recent market analysis report. That way, you can understand what these shifts could mean for your own investment decisions.
You know what's really captivating me these days? It's incredible how interconnected the global market has become. Actions taken in one part of the world can have these ripple effects in the most unexpected ways. And China's recent moves are a prime example of this in action.
It's true. So let's dive right into the heart of it. This report zeroes in on China's new stimulus measures. They're designed to help them hit their ambitious 5% growth target for 2024. Now, you might be thinking, okay, but why should I care about China's growth target?
Right, it's a fair question. Basically, when the world's second largest economy wants to grow, it creates this ripple effect. Think of it this way. A thriving Chinese economy means increased consumer spending. And that's where things get really interesting for investors around the world.
Exactly. And you know what? The markets have definitely taken notice. This report highlights a surge in Chinese markets, like a major surge. They just experienced their best week since 2008. We're talking Alibaba shooting up by 18%. JD.com had this phenomenal 30% jump. And even Baidu saw a healthy 17% increase.
Yeah, these aren't just random numbers. They really reflect a surge in confidence, a belief that China's stimulus efforts are going to translate into real growth. And for companies who are really tuned in to Chinese consumers, this means a very promising outlook.
Absolutely. And speaking of promising outlooks, let's talk luxury. This report specifically called out companies like LVMH Hermes and Moncler. They're all seeing these stock boosts, and it's largely thanks to their strong presence in the Chinese market. We're talking about a market where Chinese consumers make up almost a third of sales for some of these brands.
It's like strategic positioning that's paying off big time, and I mean, literally paying dividends.
Yeah.
These brands have really carefully cultivated their image and their presence in the Chinese market. And now as that market starts to boom, they're reaping the benefit.
And get this, LVMH isn't just riding the wave, they're making some bold moves. They snag a 10% stake in the holding company that controls Moncler. And they even have the option to bump that stake up to 22%. I mean, this could be the beginning of a luxury powerhouse, don't you think?
Oh, absolutely. This potential acquisition isn't just about some numbers on a balance sheet. This is about shaping the future of luxury. LVMH clearly sees this long-term advantage in aligning themselves with Moncler, especially with the Chinese luxury market continuing to grow. And the market seems to agree. Moncler stock jumped almost 10% after that news dropped last Friday.
Wow. It really is amazing to see these kinds of moves taking shape. So we've seen how China's economic moves are influencing luxury brands, but their impact goes way beyond high-end fashion. This report also highlighted some really cool developments in the tech world, particularly with companies like Alibaba and Nvidia.
Oh yeah, this is where it gets really interesting from a tech innovation standpoint. So Alibaba and Nvidia are teaming up. They're going to develop autonomous driving tech and cloud services specifically for Chinese automakers.
Exactly. Can you imagine? In the near future, navigating those crazy busy streets of Beijing could all be done autonomously. This isn't just some futuristic fantasy either. This partnership is a major signal that self-driving vehicles are becoming a reality, and they're starting with the world's biggest car market.
Yeah, and you know what that means for someone like you. It could completely change what it means to even own a car, right? Think about the impact on your commute time, even how our cities are designed.
That's wild when you really think about it. But speaking of groundbreaking tech, Meta's making some big moves too. The report mentioned they hit an all-time stock high after they revealed their newest VR headset and a prototype for these AI-powered AR glasses.
It's pretty cool what Meta's doing because they're not just fixated on hardware. They're really leaning into AI to make these immersive experiences that blend like the digital world with the physical world. We haven't really seen anything like it before. And this goes way beyond just like gaming or entertainment.
Oh, absolutely. There's this one detail in the report that really stuck with me. Meta is actually using AI for real-time language translation in Instagram Reels. Just picture it. You're scrolling through Reels and you see one filmed in, let's say, Korean,
Right.
but you can understand it perfectly in English.
Yeah, that's huge for creators and for anyone watching.
But
We're talking about breaking down language barriers, opening up this whole world of content and connection.
And it's not just Meta either. The report mentioned that YouTube is already on board with this, using similar AI tech for real-time translation for their videos.
Exactly. It really shows you how AI is becoming this seamless part of our digital lives. Like we're moving towards this future where language isn't a barrier to enjoying content or connecting with people from anywhere in the world.
I know, it's pretty mind-blowing when you actually stop and think about it.
Mm.
Okay, so we've covered a ton of ground already, but this report is seriously packed with insights. Let's switch gears for a second and look at some other companies the report mentioned. Companies whose fates are kind of tied to these trends we've been talking about.
Okay, sounds good. What else caught your eye?
Well, they talked about Intel and the challenges they're facing. They even mentioned that Intel might be looking for a $5 billion investment with a B, just to strengthen their position.
Yeah, it just goes to show you even giants like Intel aren't immune to market pressures. They're up against some serious competition, so these strategic investments are going to be crucial for them in the long run.
For sure. Then there's Visa. They got hit with this antitrust lawsuit recently, and for anyone who's not familiar with that term, it basically means the government is looking into whether they're limiting competition.
Right.
So, not great. This lawsuit caused their stock price to take a 6% dip.
It's that classic case of risk versus reward, right?
Yeah. Some analysts think this could actually be a good buying opportunity, like for those who are willing to hang in there. Because despite the lawsuit, Visa's still a pretty major player in the payments world.
It'll be interesting to see how that all plays out. Switching gears a bit to the car industry, the report mentioned Tesla could actually benefit from this proposed U.S. ban on Chinese software in cars.
Oh, yeah.
Yeah, so this move, if it goes through, could give Tesla a real advantage, especially as the electric vehicle market keeps growing.
It's crazy how these big geopolitical decisions can directly impact companies like that. And then, of course, it trickles down to our portfolios, too. Speaking of interesting moves, PayPal's making a splash in the crypto world.
Really? What are they up to?
Yeah, they're expanding their services. They're going to let business clients buy, sell, and even hold different cryptocurrencies.
Wow, that's a pretty smart move on PayPal's end. They're positioning themselves really well as crypto keeps getting more popular and more widely used.
Totally. It's like everyone's trying to find their place in this constantly changing market. And I almost forgot. We got to talk about good old McDonald's. The report mentioned that they're increasing their dividend. For those who don't know, that's the part of their profit they share with stockholders. They're upping it by 6%.
Oh, wow. That's pretty significant. That's good news if you're looking for a reliable investment. But it does make you wonder. Their stock's at an all-time high right now. Some analysts are saying McDonald's might actually be fully valued at this point.
Yeah, so investors are probably thinking, should I buy now or wait and see if the price drops a bit?
Hmm.
It's a tough call, trying to balance that potential for growth with the current value.
Exactly, and this actually circles back to what we were talking about earlier with China. Remember how those stimulus efforts are impacting luxury brands and tech? Well, even McDonald's, a company with a huge global presence, could be influenced by how China's economy performs.
It really goes to show you just how interconnected everything is, right? Something happens over there and it can have ripple effects on businesses, investors, even our everyday lives in ways we don't always expect.
It's true, and I think that's a really important takeaway from today's deep dive. As you're making your own financial decisions, remember, knowledge is power. Stay informed about what's happening globally. Try to understand those market forces at play, and don't be afraid to ask questions.
Couldn't have said it better myself. This deep dive has been a wild ride through market movers, strategic decisions, and all these emerging trends. Hopefully you all learned a thing or two that you can use on your own investing journey.
Yeah, and remember, the market never sits still, right? What's true today might change tomorrow. So stay curious, stay engaged, and most importantly, enjoy the ride.
Love that. Well said. Until next time, everyone keep exploring those connections.